Hi everyone, this is Renuka and I work in IT firm which are related to investment banking. So I work vastly on fix protocol and solve the issues related with it. I have started a new series today for the fix protocol and it will be beneficial for beginners. So let us see what are the topics I will be covering today. Firstly, I will be giving introduction to fix protocol, then what are fixed protocol users, and then fixed architecture. So our first topic is fixed protocol. What is fix? Fix, long form of fix is financial information exchange. Protocol is an electronic communications protocol initiated in 1992 for international real-time exchange of information related to securities, transactions, and markets. So basically, fixed protocol helps us to send the information. In which information? That is, if a client wants to buy some trade or sell some trade, they will be using fixed protocol to send this information. Okay. So prior to 1992, information for buying or selling trades were communicated verbally over phone. As you can see in the images, how the trading flow works, and there is a lot of chaos on the trading floor. So what was happening before 1992? Suppose a client wants to buy a sell or sell a trade, he all the communication was done on phone. Example, hey John, just buy me IBM stock with price $4.2, 50 shares. So all this was communicated via phone, or we can say it manually. It is quite obvious that the errors are going to exist. So to avoid all this, Fidelity Investment realized that information from broker dealers could be routed to wrong trader or lost when parties hung up their phone. So, fixed protocol specification was originally authored in 1992 by Robert Bock and Chris Morstad to enable electronic communication between Fidelity Investments and Salomon Brothers. So, they wanted communication to be replaced from manual to machine readable data, which could be then shared among traders. So latest fixed version is 5.0 and current production versions are 4.1 to 4.4. Who are fixed protocol users? Buy side firms, sell side firms, and exchanges. So what are buy side firms? These refer to advising institutions concerned with buying investment services like private equity funds, mutual funds, hedge funds, and these use FIX to send and receive pre-trade, trade, and post-trade messages to and from sell-side firms. So there will be a buyer who wants to buy some trades, like one of the client ABC wants to buy 50 stocks of IBM shares at XYZ quantity. So there will be a buyer and there will be a seller. So sellers are sell side firms. These provide services to sell securities, and these include investment banks, brokers, etc. These use FIX to send and receive pre-trade, trade, and post-trade messages to and from buy-side firms. And here comes the most important user, that is exchanges. Exchanges use FIX to receive trades from their members, who are their members, buy side and sell side firms, and send executions back and other trading related messages. Let us see more details in our diagram. So here comes the buy side, which includes institutional investors, which are mutual funds, hedge funds, asset management. These are buy side. These go to the brokerage firms. Brokerage firms have various systems which handle the fixed messages, like order management system, order routing system, execution, and other services at their side, and which forward these messages to exchanges. So here are the fixed protocol users. Let us move to fixed architecture, how it works. Fixed architecture contains two layers, that is session and application layer. So as we can see in the image in the right hand corner, what is the main purpose of session layer in OSI model? So session layer basically synchronizes data exchange between upper and lower layers. So there will be one sender and one receiver. Like, hey, I would like to send you something, and receiver will check on his side whether the sender is configured at his side. Yeah, it is proper sender. Yeah, it sounds good, and establish a connection. So main duty of session layer is to establish connection and close the connection. So we will go to our points mentioned. Session layer aims to provide high performance, deals with initialization, maintenance, and termination of connection. There is a bidirectional stream of order message transfer between two parties, sell side and buy side. These two parties first do handshaking to start initialization of messages, and then there is a data integrity, and then there is a message delivery. Sequence and connection is held by session layer. Sounds good? Let us see what is application layer. Application layer basically deals with business specific functions, order creation and cancellation, replacement, etc. It handles business related stuff like trades between multiple parties. It subscribes to market data. What is market data? It is the information about financial markets, which is having details like price, trading volume, trading period of a particular stock. So, what application layer does basically, it subscribes to market data, processes, parses, and creates execution report. So, what is application layer? What is application layer does basically in OSI model? It serves as an interface between end user application and underlying network services. What we conclude here is session layer is more concerned about performance, application layer is more concerned about business related functions. This ends our session here. More information to come in next series. Thank you for watching.